Welcome to Macro Crest, where we focus on fundamentals for our directional bias and then technicals for our entries. I apologize first of all for this very terrible network I'm experiencing here. So last week was some form of a neutral week, very dull, and there's not much of volatility. But this week, I'm looking at volatility coming in at the end of the week, but it might surprise us that there might be volatility earlier in the week. So I've been neutral on the dollar to kind of bullish on it, but my focus is changing a little bit to a kind of neutral and almost bearish. So if we look at this, we have PMIs earlier in the week. Then we have this core CPI, the inflation data from the euro, which is not going to affect the euro that much because they're still looking at cutting at least once before the year runs out. But I'm not really bothered about that for now because the Fed is what is holding the entire market right now. If you look at this data, you're looking at the labor data on the Fed on Friday. Average hourly earnings coming in at 0.3%, which is still cool. It is not that much, but it's okay. The NFP, it was at 228k in April, but now August it was 73k, and now they're pricing in 74k. Right? Note it was revised down. So if this data comes in at 74k, it's cool, but then the unemployment rate is the most important one, which is that of the measurements the Fed is looking at. Powell said that. So if if unemployment rate strikes at 4.3%, as the market is expecting, it will not be bad that much, but the market is going to shift bearish for the dollar. And if it shifts bearish for the dollar, we will be expecting a hawkish cuts from the Fed. So not to talk much on that. On the Dixie, we've been bearish on the Dixie. I don't really have much to say. So the Dixie is bearish, and then I'm looking at it's bearish. As you can see, the market is just going to the downside, just lower low, lower high, lower low, lower high. So we are looking for a lower low, which if you look at it in the euro, it's the same thing. Look at it in the pound USD. So I'm just kind of waiting. So if you can see this, I'm in a waiting mode. I'm expecting this guy to continue to the upside. It's a new month, but it's currently almost the same thing. Nothing is going to change that much. You look at the pay. I'm looking at NZD weakness. The reason is because of let's clear all this. The entire data is going down. It's bad. So I'm bearish on it. If you look at this on the monthly and the weekly, you would see that it is going to the upside, right? And the candle is showing bearish pressure, also bullish pressure. This is high, this is low, this is high, this is a low. So I was looking at this as a continuation to the upside, but then I have an issue here, which is this was the break of structure. If the market doesn't hold, it should come lower somewhere here, and on the daily time frame that should be some distance. You remember this distance? So I was already positioned here. So I'm in a position here already, but it might be a loss, it might be a win. I'm working on probabilities, trying to see if this can push higher. Then I might continue buying, but if it comes lower here, I will look for longs. That's for GN. I'm also in Aussie Swiss. The reason why I'm in Aussie Swiss is due to Swiss strength, and I gave this view some weeks ago, a week ago, So this is bearish already. On the daily time frame, what you see here is this was a downtrend. We have this, so it took about a month and 2 weeks, then we had this drop, and then we have this push. So I'm anticipating this drop again. That's why, remember, the switch is safe haven. That's it. The card is still weak though, but what is it weak against? That's the question. What is more stronger than the card? That's the question you should ask yourself. So indirectly this week I'm very neutral on so many pairs. This week I'm looking at pound strength. If I'm looking at pound strength, that's why I'm looking at this pound yen. Pound NZD. So this pound yen, now this is the pay that is giving me a headache, because I was expecting a push to the upside. Now this is longs, right? If you look at it on the daily time frame, I was looking at shorts, but then the data from the yen was not strong enough, so this was a good longs for me. But now the problem I have here is this was the liquidity grab, and then this has created a higher high. I was expecting that price is going to react from here to the upside, but now I see that the possibility of that happening is already eliminated. So potentially price might come back to this area, but if I see some form of break to the upside, then I would long it. It's that simple. That's just it for the week. Dollar weakness, the USD JPY, it was a good trade, but shorting it from here, it was nice, but we can still look for shorts here, which I've already gave this analysis last week. Gold and silver, I said it's going to go to the upside on the silver, which was fantastic, but I did not participate in this position. Okay, so this is a new month, just cleared a new high. It cleared the previous high, so I'm expecting a little push, pull back, and then we can long again on this time frame. The same thing with gold, due to the fact that Trump has fired a Fed member, disturbing the market. There's been geopolitical crisis here and there, Russia, about Ukraine, India, and the US. So let's just see how the new week is going to be, but trade safe, please. All right.